So, Joe, I am a big proponent of the U.S. taking the worldwide lead in crypto.
This is Scott Bessent. He is the Secretary of the Treasury for the United States, and he controls the fate of the entire global economy and possibly the future of humanity itself. If you're a finance nerd like myself, you know exactly who he is. But the average person, they've never even heard of him. All of the volatility in the markets this year, the tariffs, the spending cuts, Scott Bessent is the mastermind behind it all. In this video, we are going to take a deep dive into the mind of Scott Bessent to try to better understand what he is cooking up behind the scenes, what his long-term plan is for the US economy, and how we can position our portfolios to profit big. Because while the headlines may tell one story, what's actually going on underneath the surface is something entirely different. Let's get into it. Bessent was appointed as the Treasury Secretary in January of this year, and he was handed a ticking time bomb. That ticking time bomb is the United States debt, which is quickly approaching 37 trillion with a T dollars. But to be more specific, the ticking time bomb is the amount of new debt that has to be issued this year, which amounts to roughly $9 trillion. Scott Bessent's goal right now, and quite frankly, the number one goal of the entire Trump administration, is to get interest rates on long-term U.S. Treasuries down. Right now, rates are at the highest they've been in almost 2 decades, and the Treasury issuing debt at these rates could very quickly cause the U.S. debt to spiral out of control. So, how does Bessent plan to get rates down? By causing chaos. No, I'm not kidding. The endless speculation and back and forth on tariff policy over the past few months, and the utter confusion that this has caused in the markets, this is all by design. Investors hate uncertainty, and what they have historically done when times are uncertain is purchase U.S. Treasuries. Because when Treasuries go up, interest rates come down. But there is a giant problem. The plan is not working. Instead of investors piling into Treasuries when times are uncertain, we have seen the exact opposite. In fact, other countries are dumping their treasuries in retaliation to the U.S. tariffs. Despite all of Bessent's efforts, yields have skyrocketed. The 10-year treasury yield surged from 3.9% to over 4.5% in a matter of days, one of the fastest spikes in modern history. That is not what you want to see when you're trying to lower borrowing costs. And all of this is not the sign of a healthy financial system. U.S. Treasuries are the global reserve asset. They underpin the entire financial system, and they are trading with the volatility of a meme coin. But here's the kicker. While organic demand is proving insufficient at bringing rates down, there are 2 more viable options. The first is BitBonds. BitBonds are an idea recently popularized by the Bitcoin Policy Institute. And I am not exaggerating when I say this. BitBonds could completely change the trajectory of the US debt crisis. Here's how they work. At the surface, BitBonds function very similarly to traditional US Treasury bonds. The government borrows money from investors, and they pay it back over time with interest. But with BitBonds, there's a twist. The Treasury would take a small percentage of the capital raised, around 10%, and use it to buy Bitcoin. At the end of the bond's term, if the Bitcoin price has gone up, the investor and the government split the profits. If the Bitcoin price doesn't go up, no problem. The investor gets their full principal and interest just like a regular treasury. So what does this amount to? The investor gets upside exposure to Bitcoin without any of the downside risk. And the government, they get to borrow money at lower interest rates because the embedded Bitcoin optionality makes these bonds more attractive. It's simple, it's elegant, and it gives the US a powerful new tool to draw on capital. And the best part? This model already exists in the market today in the form of MicroStrategy convertible notes. Let's break this down. Since 2020, MicroStrategy has raised billions of dollars through convertible note offerings, in some cases borrowing at interest rates as low as 0%. Why were investors willing to lend at 0% interest? Because these notes came with exposure to Bitcoin upside. It's a win-win. MicroStrategy got cheap capital, and investors got to participate in Bitcoin's moonshot potential without buying Bitcoin directly and exposing themselves to the downside volatility. BitBonds are the same idea, just at the sovereign level. If the US government were to issue BitBonds, it would create organic global demand for treasuries once again, lower interest rates, and allow the United States government to accumulate Bitcoin as a strategic reserve asset in a budget-neutral fashion. It's bold, it's forward-thinking, and it is exactly the kind of asymmetric game theory-based move the United States should pull off. And if you're thinking, well, okay, Bonds sound cool, but there's no way the US government would actually buy Bitcoin. Think again. Because Scott Bessent, the man currently holding the keys to the treasury, is a major Bitcoin bull.
Different stores of value over time. Bitcoin's becoming a store of value. Gold has historically been a store of value.
In fact, here's what he said all the way back in 2021 before he ever stepped foot into his role as the Treasury Secretary. I own Bitcoin. I think it's a store of value. If I was the Chinese, I'd want to see the dollar dethroned. And Bitcoin is one of the ways to do it. If I'm the US, I want to embrace Bitcoin as a strategic asset. That quote is wild. And remember, this is coming from the guy who is effectively the CFO of the United States of America. In the same interview, he said, the US needs to recognize the strategic value of Bitcoin, not just as an investment, but as a geopolitical tool. It is in our interest to be long optionality. And that's what BitBonds are. They are a way for the US government to get long Bitcoin optionality while lowering borrowing costs and reinforcing dollar dominance in the years and decades to come. So when you connect the dots, Bessent's views, the giant debt trap we're in, proven model for MicroStrategy, BitBonds start looking less like a fringe idea and more like an inevitable next step. But let's play devil's advocate, because as an investor, it's important to not focus on what you think should happen, but rather to focus on probabilities and determine which outcomes are the most likely, and then to position your capital accordingly. So, back to the drawing board. Bessent and Trump need to get rates down. Tariff mania isn't working, and for the sake of argument, let's say BitBonds are off the table. What's left? The good old Federal Reserve. Money printing, QE, liquidity support, whatever label they want to slap on it, end result is the same. The central bank buys bonds, pushes rates down, and floods the system with new units of currency. And here's where things get interesting, because Bessent knows this is in play. In fact, you could argue his entire strategy is predicated on the idea that eventually the Fed is going to be forced back into the game. It's the final move, the ultimate failsafe for insolvent governments, to print your way out of your debt. And this is where you need to be paying very, very close attention, because if and when this happens, hard assets are going to rip. Bitcoin, tech stocks, gold, real estate, they all benefit when liquidity comes back into the system. Just look at this chart showing global M2 with Bitcoin. They move almost entirely in tandem. When liquidity increases, Bitcoin follows suit. And here's the part most people are missing. Bessent isn't playing defense, he's playing offense. He is laying the groundwork for the next Bitcoin bull market. Scott Bessent has inherited a financial grenade. The treasury market is broken, yields are rising when they need to fall, and the most likely solution on the table, the Federal Reserve prints money. Whether they call it liquidity injections, yield curve control, or temporary asset purchases, it is all just money printing in disguise. And when the money printers are turned back on, you do not want to be sitting in cash. You want exposure to hard assets, and nothing is harder than Bitcoin. But here's the kicker. Why just buy Bitcoin when you can mine it? Bitcoin mining is the most capital efficient way to accumulate Bitcoin. And right now, Blockware has miners online ready to deploy to you. We host your miners, plug them into low-cost power at our world-class data centers, and you collect the mining rewards. And with the Fed gearing up for its next round of money printing, mining Bitcoin could be one of the smartest plays you make. Click the link in the description to start mining Bitcoin today, because when this liquidity wave hits, you're either riding it or drowning in it.